Today, I've got Zack here from Phipps Brittain Real Estate, where we're going to be unpacking a lot of big changes in the Waterloo region.
We've seen our market show signs of big changes, and this past month was the first big jump. This is the March data for each year. In 2024, our median sale price was 765 and a half. We are down about 40 grand in 2025. The next line there, 1,073. That was the amount of listings for sale the end of March in 2024. We had almost 1,700 exactly at the end of March in 2025. This is the big number, guys. So what I mean by that is call it about 70% more homes on the market this month than we did the same month the year before. That alone isn't a red alert concerning, but when you accompany it with the next number underneath, 597 in 24 and 463 in 25. That's the number of homes that actually sold. So almost 70% more homes on the market in 25, and we're selling 20% less. There is a large chunk of the market that is stacking in inventory.
Welcome back to the Canadian Real Estate Channel. I'm Adam J.D. Martin, your host, and today I've got Zack here from Phipps Brittain Real Estate, where we're going to be unpacking a lot of big changes in the Waterloo region. We've had a big shift in inventory. We're going to be talking today about some ADU information I think you guys really need to know, and we're also going to be talking about things like immigration, interest rates, employment trends, and most of all, I'm excited to bring you guys some private deals at the end of the video with Zack, so make sure you stick around to the end. Let's jump right in. Zack, welcome back to the channel.
Thank you. Thank you. Good to be back. Adam, we are early April, mid-April now at the recording of this. So we got like full Q1 data I've been looking at. We're going to go into 2025, but we'll compare back to 2024 as well. I got some notes just kind of on March, April markets and a few key topics I kind of want to hit, like interest rates, immigration changes. Our rental market isn't just going straight up anymore. So we're seeing those changes kind of bleed into, investors that are holding real estate, investors that are closing and going to be leasing up real estate, and then real trends just specifically to like what I'm seeing buyers and sellers do differently than we have in kind of previous years, because we're kind of creeping into this different type of market. And I'll tease a couple of two off-market deals we got just towards the end of the video, and our investor hot list, of course, we'll share some details on that. But to jump in, on the last video, we shared just a quick little hit on an ADU open house. So this wasn't the one that we did the open house at. This was an 850 square foot, 2-bedroom, 1.5 bath that we built in Kitchener. Our construction partners over at King Street Construction, they're the ones that handled everything, the planning, the concept, the design, the build. And they came to us, and we had a property that we did for a client we've done a lot of business with. And it was going to be vacant for a couple weeks just between when they were finishing it, final permit closed up, and when the lease was going to start. So we threw an open house there to show it off. We find it's, I love sharing the media on it. I got a couple other ones that we've done, but I find it's just really helpful to get in-person view of these things, because people don't really know what they really look like. There's, I want to say, less than 50 to 100 that have even been built in our entire region in the last couple of years since they released it. But like, people hear tiny home or garden suite, and they get a conception or a concept in their mind, maybe the size or kind of the finish that would look like. But I just want to encourage people, if you get a chance to come look at one, please do so. You have to realize, like, this is a detached house in your backyard, right? Yeah. So, I mean, this one, we made a couple modifications to one of the models for this particular client. They wanted the extra half bath, and they wanted, nicer kitchen living area. So there are some things that we did some minor modifications to. We also did a custom one. This was an 850 square foot one just outside of KW, still here in Waterloo Region. But if you look closely, it's got a walkout basement. Do I have another shot? I don't. So, but it's got a walkout basement. So like, you have enough for 2 full rooms and a living room in the basement and another bathroom. They did like vaulted ceiling with a fireplace in the living room where the kitchen is, primary bedroom on the main floor with an ensuite. It overlooks the big yard and the river behind them. Like, this one was sick. So like, you can really You can do them up, you can ball out if you want to, but a lot of our clients are kind of finding that middle ground if they're doing this, whether it's an investor, they'll kind of want to max rental income and a property value, but they don't, you don't want to blow the bank on it. And just for most people, most single family ones, if you're just doing like a single detached ADU, you're anywhere from 200 to 300,000 plus HST, depending on how big and sexy you really want to make it, how complicated your lot is. If you're doing extra stuff like upgrading your driveway or redoing your entire driveway, or also doing some touch-ups to the main house at the same time because the guys are on site, that can adjust your budget accordingly. But generally speaking, most of the builds, especially for homeowners and investors that are only doing like a single one, you're mid twos ish, give or take, depending on how sexy you want or how complicated your lot is. So if you guys are running rough numbers or you have a lot you're looking at, flip me the address, or we can get you in touch with our construction team. They can do most kind of preliminary, hey, yeah, you can probably do it up to this size. Here's where you might run into some problems, or hey, it's pretty straightforward. Well, you can do that all online. So, there's a lot of websites that, not a lot, but there's some websites that are giving information like, yeah, you can build here, yeah, you can build there. Let's just reiterate something, Adam. For those of you that are thinking about doing ADUs or additions or anything like that, anywhere in Ontario, you can build 3 lots on anything that's zoned residential. In Kitchener specific, you can do 4. Some other cities have 4. Waterloo's different, Cambridge is different, but the biggest thing is, how big can I build? And what is going to be your general cost for that size? And are there any obvious complications like access to lot, parking, setbacks, being too close to other structures, either on your lot or on the neighboring lot? Those are kind of the big initial looks. So if you have questions, it is a case by case basis. Send us a DM or send me a quick email. I know Adam and Peter will have the contact information in this video, but if you see this video before the end of April and you want to come check one out before we get a tenant in there, we can give a private tour. You guys can see one for yourself. Yeah, there's the 690 square foot 2-bedroom. That one's
Beautiful.
just getting finished up. So that being said, Adam, we send out invites to our events on our investor hot list first. We send out our deals to our investor hot list. If you guys want deals, if you want events, if you guys want to know when we're doing networking events or when we're doing group calls, get on the investor hot list. It's a weekly email. I personally go through it. I send deals that I think could offer value, and I also throw in some nuggets for what I think is going on in the market. There's a free newsletter, guys, if you guys want to know anything that's going on in Waterloo Region real estate, and you also want a taste of the deals. So, Adam, at the end of the video, we're actually going to go through 2 off-market deals. I got 2
Nice.
quick ones. I got the financials on it. I'll give you guys the high level business at the end. If you want to just peek those deals, go nuts. Otherwise, get on the investor hot list because I sent those out the other day. So take a peek at that. Now, for the people that are watching the video, a lot of people come to the Canadian Real Estate channel to kind of just get a general idea of what's going on in the markets they're looking at. You guys and girls out there that already own real estate here in Waterloo Region, if this is your first time checking out the video, awesome, welcome. But if you're a regular or semi-regular, we like to get a little bit of a hit for the data. Numbers don't lie, Adam. Statistics over opinions, my friends. Statistics should be a great way to start your base for your level of knowledge in any given market. And we've seen our market show signs of big changes. And this past month was the first big jump. So 2024 there on my left, 25 on my right. This is the March data for each year. In 2024, our median sale price was 765 and a half. We are down about 40 grand in 2025. Now, this is primarily because a lot of the properties that are selling are going to be at lower price points, and we have a much larger volume of condos and stacked townhouses on the market that are coming up with a larger percentage of the overall sales. But we've also seen prices soften across the board, right? Some buyers are, some sellers are a little bit more motivated, or maybe they're in a sticky spot. Few of those are reaching the market and they're actually selling. They're more motivated. They're going to slash prices to sell because they need to, instead of holding on like a lot of other, owners and investors have been. The next line there, 1,073. That was the amount of listings for sale the end of March in 2024. We had almost 1,700 exactly at the end of March in 2025. This is the big number, guys.
Yeah.
This is the big, oh, okay. So what I mean by that, Adam, is we have 630, 627 listings, real quick, more. Call it about 70% more homes on the market this month than we did the same month the year before. That alone isn't a red alert concerning, but when you accompany it with the next number underneath, 597 in 24 and 463 in 25. That's the number of homes that actually sold. So we have more homes on the market, almost 70% more homes on the market in 25, and we're selling like 130 less. We're selling
Yeah.
20% less. So I have 65% more and I'm selling 20% less. There is a large chunk of the market that is stacking in inventory. And if it continues to stack in inventory, Adam, and less sales continue to happen, what will happen?
Yeah, I mean, that's a pretty shocking number, right? So again, if we just have inventory sitting like that, because another way to digest that number is roughly 60 to 70% of the listings are staying on the market. And so the only
Exactly.
way to clear that inventory out, because again, we have to understand the psychology of a buyer and a seller, is you probably didn't wake up on a Tuesday morning and decide to sell the largest asset in your life. You probably decided to list your house because something changed, right? Either something in your lifestyle changed, your job changed, something about your interests changed to make you want to list and sell that property today instead of yesterday or the day before or the last 6 months or even 6 months from now. You did it today. And so there's obviously a motivation there. And so when we see 66 or 70% of those listings stay on the market, there's going to be a large portion of those people that must sell, right? And they have to sell again because their financial situation changed or something in their life changed so that they need to sell this asset. And so the obvious thing to happen in that situation is price just must be traded off, right? If you must sell and there's a ton of other inventory and the same amount of money chasing all those various goods, you have to stand out somehow. So if you're a seller in this situation, you want to stand out by presenting your property, your asset, the best possible way you can. That means working with a great realtor like Zack so you can get great marketing, you can get great listing photos, you can get a great strategy for yourself to actually sell at a competitive price. But for a lot of other people, what they're going to do is just slash price. And that's
Yeah.
exactly where the buyers are going to go. They're just going to go, okay, I'm going to start chasing. I'm going to start throwing out a lot more offers now, and I'm going to put in creative prices and creative terms in order to get the best deal out of all this inventory that's sitting. And of course,
Yeah.
people are going to have to transact.
Yeah, yeah, and the creativity is a little bit less so in the single family market than it is in
Yep,
the, investor market because there's just fewer variables at play,
of
right?
course.
Most homeowners, simplicity is usually the best way to go, but that doesn't mean you can't get creative with your marketing or negotiating strategies, right? How you present the property, how you're communicating, how you're presenting your deals, like that is still like a very much an important cog to a successful sale. The big thing here is just if buyers continue to stay on the sidelines and do not, really start buying up properties, we're going to have, maybe another 30 days where we have a lot of inventory coming up. And then it's going to take another 30 or 60 days for price slashing to really show in the data. We'll have a
Yeah,
month or two, which is kind of where we're at now in April and probably a little bit into May, of sellers pricing their homes based on what is on the market and what is sold in, you know, February, March, April. You have something
yes,
that's sold in February and March, that's how you're pricing your home in April or May.
yep,
Well, if we have inventory sitting on the market for another 30, 60, 90 days, and then there's price drops, and then it's another 30 to 60, 90 days to sell and close, we'll start to see the data probably in 2 or 3 months to show, hey, are we really trending downwards in price point, or is the market and the sellers kind of sticking firm? So,
yeah,
I don't expect this to be the, oh my God, prices are going to fall 20, 30, 40%. There's likely not a scenario where that's going to happen. We'll reach a point where investors are getting a little more confidence, numbers are starting to make more sense, they start gobbling up some small to medium sized multi units, and then as soon as I think homeowners and residents have confidence that the economy is at least stabilizing or somewhat heading in a direction where inflation and interest rate changes aren't going to be dramatic, and they're not going to lose their job, let's not underline how important that is,
yeah,
then homeowners can start making moves with confidence. Now, a lot of people that are in our world right now are selling and buying in the same market. Yeah, yeah, we got a house to sell, we want to upgrade or we want to relocate or we need a different layout for our changing needs. Okay. Well, if you're buying a detached house and selling a detached house in the same market, As long as you don't take unnecessary risk, you're trading like for like in the same market. But what we are starting to see is a lot more calls from investors fishing around to say, hey, are these guys motivated now? They've been on the market for a few months. Hey, I see a couple more options. Can we go check some of these out and crunch some numbers? A lot more on the buy side starting to get curious because although interest rates didn't drop the other day, they are at a fairly attractive or getting closer to a fairly attractive numbers, and we are seeing sellers, some, not a lot, be a little bit more motivated to really get a deal done because they may be thinking, hey, if there's more inventory on the market tomorrow, it's going to be harder for me to sell for my price. And that brings
Right.
us to like three super important variables. Interest rates first. We'll kind of gloss over that. It's sensationalized in the media. I know you guys all know what's going on with interest rates. We're still in the mid to low fours. There are pressure on rates to go lower. I think if there's a lot more economic uncertainty, then there is a scenario where rates could come down a little bit more. But, I mean, me and Adam share the very similar opinion on this, but I do think we're close to, if not where we should be at for interest rates if we do want
Yeah.
stable inflation. And that's just opinion, right? Like the no amount of data I'm going to be able to find or digest is going to like confirm exactly that, because let's get real, all economists and all policymakers are all just making their best fucking guess anyway right now.
Yeah.
So I do think we're kind of close to where we should be, but I would expect maybe them to come down a little bit, especially if it looks like Canadian economy is going to struggle, which is also looking like it's fairly likely.
Yeah.
And that leads us to immigration. So everybody's like, immigration's falling out of the sky. And like, I do assume that immigration is going to decline dramatically, but 2024 was crazy. Like,
Yeah.
we brought in over 500,000 people to Ontario. Like, that was crazy. So, for right now, the data we're going off of is 2024 because we don't have 25 data yet. I do expect that number to like really shrink down. I don't know if it'll be cut in half or worse, but immigration's really going to slow here for a little bit, depending on which government gets in, depending on kind of what their policy changes are going to be. I would expect immigration is going to be pretty slow here for about a year or two, regardless of who gets in anyway. And then rentals softening big time. So it was harder to fill units here in Waterloo Region the last 6 months. And if you guys have checked any CMHC data, if you follow any other real estate investors that are really into the data here in Ontario, it is a dramatic jump in purpose-built rentals that are being built and brought to market. I think we're actually getting close to all-time highs for how much we're bringing to market, because investors couldn't make sense of building supply to sell, affordable single-family homes. So what are investors going to do? They're going to follow the money, and they can make money by building purpose-built rentals because rental rates have jumped up so high.
Yeah.
So we're seeing supply coming to market, but we're seeing demand soften. And if we see immigration soften on top of that, the rental market, is not going to get eviscerated, but there'll be a little bit of a softening. Expect if you're running numbers on, hey, I need max market rents to make this deal make sense. Yeah, just a little bit of a room for error on that one, maybe, ladies and gentlemen. Maybe give yourself a 10 to 20% cushion on that, because what we're seeing is the mindset, and I think we'll talk about it later in the video, is the mindset of buyers is very similar to the mindset of renters right now. Unless they need to make something happen, the mindset is, well, if this isn't a perfect deal or I can't get a really good deal now, I'll get a good deal tomorrow because I got way more properties coming up. Buyers right
Yeah.
now are hearing, oh, Zach, there's 70% more homes on the market than there was last year. And there's really not that much competition for 90% of the listings, whether they're for sale or for lease out there. Okay. If I can't get a sweet deal now, Adam,
Yeah.
whatever. There's more coming up next week, baby. Right? Whereas 5 years ago, if you didn't get a deal today, you were spending 10 grand more next month.
Yeah.
So everybody's jumping in on the pile, right? So, Adam, I don't know if you have any comments on any of these sections here, but these were like the three things that I was like, hey, especially for immigration and rental data, though, is it's kind of a laggard. So I
Yeah.
really am very curious to see how aggressive immigration falls off a cliff. I expect it to drop dramatically, especially because schools are basically saying, no, we don't have capacity for all these programs. We're not bringing as many international students either here in Southern Ontario. So I'm curious if you have any info or if you have any opinion on that.
Yeah. I quickly Googled while you were chatting there, just what even Ontario's population is. And the best estimate, it looks like it's about 16 million.
Sounds about right, yeah.
So if you think about, like, honestly, adding 500,000 to
Crazy.
16 million is actually a really big number. Like, that's insane. So even if I think it went to half, right? Like maybe if this year it's half of that, that's still a big number, guys.
The percentage
So
wise, it's crazy.
yeah, no, it's actually kind of crazy. But interest rates, I mean, I think 4%, like anywhere starting with a four is fine for me. I think if you're an investor, I mean, obviously case by case for the average homeowner, but as an investor, you see 4%, that's free money. I mean, it really just is a great rate to purchase at and to use for cash flow purposes if you're doing that,
Yeah.
or even if you're doing flips, like short term paying 4% or even 5%, it just that's free money. So I think that's great. I think we should stay there. I think when it goes down to like 2% is when people are getting crazy because inflation's outpacing your actual cost of money, which is really weird.
People
But yeah,
just
I
start
mean, I
taking
would,
wild risks, right? People just
well,
start
yeah,
taking
the
unnecessary
market gets
risks.
unreasonable. So immigration, yeah, I would expect that to slow down. And then for the rentals, like again, guys, you cannot be investing on the premise that you must have the absolute top market rent today or the investment doesn't work because that's just not an investment. And so again, I just really caution people like just use basic napkin math, like just try and understand what your cost per month is going to be and what that property can bring in and allow for 10% at least just for vacancy and property management and just stuff like that that most people just kind of write off on their spreadsheet. But it's like, if you can't even include that in your spreadsheet, it's probably not a great deal because, again, there's a lot of unforeseen costs when you get into rentals. There's management and upkeep and all that stuff. But, you can't be in a place where the furnace suddenly going out, that 5 grand puts you underwater. So I think
Yeah, and
like
those
it's
extra
just important to
costs,
be smart.
spread out over a 5 or a 10 year investment horizon, usually fairly predictable, but
Yeah.
you get hit with 60% of those. You don't get to pick. It's not an even
Yeah.
spread throughout the 10 years, guys. You don't get to pick, oh, I only got 3 grand set aside this year, so I can afford it. Whatever. It's
Yeah.
more like, hey, if 60% of all the stuff that's gonna go wrong happens in the first 2 years and you can't bear that,
Yeah.
all right, you're gonna one, you're gonna be really disappointed. Two, you'll feel like your investment's not gonna be successful. Three, you could be in a very poor financial position because of it. But you don't get to pick when things happen. But time will help you average out those costs, which will make
Yeah.
the investment a little bit more successful, probably. But the mindset that, oh, nothing's gonna happen because everything's new, or I've done all my homework, or Zach or Adam or another investor said it was all gonna be perfect. Like Adam is very right. Like things can and will go wrong, and there are costs that will be incurred, and you don't always get to pick when the costs come up. So
Well,
prepare
and I
for
think
that.
the scariest thing coming out of like the COVID era of people investing was this investment style, or it's not even you can't call it a strategy because it's not, but like this style of investing where it's like you're on the next Top Gun movie and you're trying to like thread the needle within a millisecond of getting your investment to work because like that just doesn't work. And so Zach and I constantly, so if you're new to the channel, Zach and I are always talking about time preference. You just need to lower your time preference. The most successful people in the world have like zero time preference. They do
Yeah.
not care if it's going to pay back in 5 years or 10 years or 20 years. They're looking at these really high level zoomed out timelines because it absolves all your risk. Like your risk goes to near zero if you just think about your investments on 10 to 15 to 20 year time horizons instead of trying to think about it on a 30, 60, 90-day time horizon where you're trying to like thread this needle. And if you don't make it, it's the end of the world.
Yeah.
I think that's, again, when we see markets shifting like this, whether it's into balance or even into a buyer's market, it always stresses the point harder that you just need to build in that calculation of like, okay, I'm looking at this investment and it doesn't need to pay me back all of my money in the next 30 days. It needs to make sense over a 5 or 10 year time horizon where we know we're investing on just a strong foundational approach of having positive cash flow or having a great exit strategy if we can't get positive cash flow. And
Yes.
it's not enough to be like, I need this to be an executive furnished rental on Airbnb, cash flowing 4 times more than any other type of investment strategy, and that's the only way it will work. Like it doesn't make sense, especially when the market's shifting so dramatically and when there's so much uncertainty, particularly with what's going on in terms of trade and tariffs and whatever. Like global trade right now is just kind of changing. And so that just stresses the fact that we need to be looking at longer time horizons and taking more calculated risk.
Yeah. And the time horizon is so funny though, because it's like my mindset was always when I started getting real estate investing, it was like, I don't know too many broke guys that have owned real estate for 30 years.
Well, you don't know any of those people. They don't exist. If you held it for 30 years, you're fine. Because in the
Sure.
last 30 years, real estate has gone up what 20 fold. Like
Yeah.
it's
So
completely absurd.
it's not about perfecting it this year or perfecting every single deal. I think people get really focused on min-maxing, each specific deal. And I think that's awesome. I think you should like a component of your thought process should be like that. Like, how can I squeeze the most out of this? But like, if I'm looking at a deal and like it's not an easy yes before I even go in to negotiate it, then it's just like, guys, like, what are we really doing here? We're setting ourselves up. Our expectations do not match what this asset is going to provide for you. Our expectations are just unrealistic. So for you investors out there that are thinking, I need to find the perfect property, like I can count on one hand how many 10 out of 10 no like deals that I've gotten for myself or for clients. And those deals are made. Those deals are not found. You make those deals, right?
Yeah,
So I just think for investors, if you guys are considering getting into a market like this, like yes, do your homework and go shop, run a ton of numbers. But like you should be able to get to a point where you're in a property for 5 minutes, you're doing some quick math either in your head or on the napkin, knowing, yeah, this is close. We could probably make this work. If you're not at
yep,
that point for your deals, let's say anything under 1 million or 2 million, then you know what? Let's sharpen the pencil. Let's get back to the drawing board. Let's hop on a call. Let me go through your numbers with you. Let me answer some of those big questions that are kind of holding you back. Because ultimately, if you're not getting to that point, then you either need to hire somebody or you just need to sharpen up a little bit, which is okay. Which is okay. So
yeah,
I think we're gonna get to some deals at the end. Here's just some trends just for specifically for the buyers, the sellers, and those investors. You buyers out there, if you're watching this video to learn a little bit more about what's going on in the local area, you want to go buy like a primary residence, like buyers out there, we know we have options. So like conditional offers are back. You don't have to compete on every listing. That doesn't mean go look at 100 properties without being critical, but that means like use that to your advantage. You have a little bit of negotiating power at the table now. You haven't had that for a decade. Use that to your advantage, right? And what I mean by using that to advantage is use that to find a motivated seller. If you're shopping for your own primary residence and an extra 5 to 10 grand on a purchase price isn't going to like end the deal for you, and you really want to find a quality deal, you're in a specific neighborhood or a specific type of property, okay, great. You're doing that for yourself to enjoy. But for me, as somebody who has that investor mindset, like I gotta fight for every dollar. Like just like it's in my heart, and my soul. So look at the comparable sales like you always do. Be confident when you shop, but also be critical. Throw in some freaking offers. Like find them motivated. Throw in some freaking offers. See if a seller's motivated to come to the table and come down on price. And I think the perception for buyers, Adam, is like I've even heard from clients that I've helped buy their first home. They're like, "Oh, would they even look at an offer under asking?" I'm like, "Guys, it's been on the market a month. Hell yeah,
yeah,
toss that in. Let's see what we can get." Right? You don't want to insult somebody to the point where they don't come back to the table. They don't think you're serious. But like, if you're in the realm of possibility or even close, sending that in, heck yeah, I don't mind writing up those offers. Let's go. That's how you get a deal, right?
yeah,
And then you sellers out there, like buyers don't need you as much as they did before. Other side of
yeah,
the coin. Stand out, right? We'll talk 10-ish% of listings, especially single family detached under 1 million. Some of those are selling over asking, right? There's scenarios where we're seeing those. But more often than not, even those scenarios, we're either seeing like 20 offers because it's just like a unique scenario or it appeals to a lot of buyers or the price is just so attractive and they marketed it really well. But more often than not, when properties are selling over asking, you're only seeing a couple offers, right? And it's primary residences. This isn't like duplexes, triplexes, fourplexes for investors, right? This is like somebody that's buying it for personal use that is willing to throw a little bit more money at it, right? So, you sellers out there, you got to stand out. Got to stand out. We'll talk about that at the end of the video. If you are considering selling a property, check out the end of this one. And then investors. Investors right now, they want less risk and they want more return, right? And as an investor, I always want to lower my risk. I always want to maximize return. But like
yeah,
the equilibrium of that for investors looking to purchase and looking to sell, we haven't found it yet. We have sellers that are still holding on to prices that just don't make sense for the interest rate environment and for what other assets are available on the market. I have had conversations with people saying, "Hey, look, if somebody's buying your property and your property is, net income's 100K after all your expenses. Here's four other deals that net 100K after expenses that are 50, 100, 150 grand cheaper than yours. Why would they come to yours? Right? And I'm like, that's you have to have direct conversations, guys. So like how is an investor going to find value in the property that you're selling? Or you investors that are looking to acquire is can I get a fair deal now? And is there's a logical path for me to increase the value or reduce my risk and still get a good return, or a combination of those variables? If so, great. Let's start talking offers and how we're going to negotiate this. If no, all right, next, there's other inventory on the market. There's anywhere from 5 to 10 deals on market right now that like I know investors can make money on. More than you could when you bought them 5 years ago, guys.
Yeah.
So I'm taking a hard look. I'm pushing a lot of my investors that have been on the sideline say, hey, we got to start running some numbers. Things are starting to look attractive. Even if you don't buy something this month, if there's a couple more months and prices do slide, all right, then all the comparable sales reflect a more attractive price point. We have another negotiating piece that we can use to our advantage to try and get a better price or better terms for you and acquire something in the summer or even in the fall and close before the end of the year. Like the scenario and the environment is starting to look more attractive for those looking to acquire. And that's exciting because we just haven't had that in Southern Ontario for a very long time. So to summarize kind of the trends is it's inconsistent as shit. It's still super inconsistent. Forward-looking data is being like, ooh, things could get, a little bit softer here for the rental market and the sale market. Prices may come down, but current data is being like, no, 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 we're sticking firm for the last 6 months. Prices have barely moved in the last 6 months, guys. So, but also just like expectations and reality between agent to agent, and agent to client. Like they're still figuring out what's happening, which is really common when a market is adjusting and when there are changes and it's shifting from, what has been the longest sellers market probably freaking ever to maybe a balanced or a really quick buyers market all of a sudden. So as markets shift, there will be inconsistencies among agents, investors, buyers, and sellers. But within those inconsistencies where opportunity lies, so be prepared and be consistent. Let them offers fly, baby. So we'll go through this quick. Adam has had this conversation with clients, partners, friends many, many times, as have I. Great listings sell. Great listings get buyers. How do you make your listing great? You can't move the property, but if it's a great location, you highlight it. It's a great location for this reason, this reason, this reason. Every location in town appeals to somebody. So I start with who's going to buy this property? If you're selling a single family home, Adam, who's going to buy this property in this neighborhood? They need these things because there's these schools, because it's close to this part of town, because it's close to these amenities, right? Like there is a story behind why it logically makes sense for somebody to buy any type of property. So I want to get into the mind of who that person is. And then I can figure out, okay, well, how do those people buy the property? Do they buy it themselves directly or do they work with a real estate agent? A little bit of both, but more often than not, they're working with a real estate agent. So what types of real estate agents do I know buy and sell these types of properties and work with those types of clients that are probably going to own this type of property? And then I will just tailor all of my marketing to those types of buyers and those types of real estate agents. I need them to come buy it. Come look at this property, come buy it, right? Condition. Are you the type of person that isn't handy like Zach? Yes, great. You don't want to lift a finger, Adam. You don't want to do shit. You want to be like, man, I want to clean this house. I want to declutter it and I want to get it up on the market. Well, that's fine. If you are saying, hey, it is what it is and I'm okay with it, then your price and your marketing has to reflect that. But if you have the capacity, the resources, or the energy to make strategic improvements, make the strategic improvements if it is going to pay off, if it is going to get more people in the door, if it's going to be able to market it more effectively to your target buyer and it's going to appeal to more people. All right, let's do those strategic improvements if we can afford them. And then features, like just compare really critically to the other properties. I offer this to clients all the time. Do you want to go look at your competition before we hit the market? I'm going to. I'm going to go take a quick once through the 3 or 4 other properties that I think are going to be the biggest competition for us on the market. Because I want to know if those sell and ours doesn't, I want to know why. Because I want
Yeah.
to see it for myself.
That's a
Because
great point.
Adam, if you're listing your house with 4 other neighbors in your block or on the market, most buyers are gonna be like, might as well go look at all of them. We're right
Of
there.
course. Yep.
I want to know. So I'll go through other properties that are going to compete with mine to compare their features and their condition. So compare critically with other options. And then price. Literally, I put this in quotes because like I caught myself like saying this to clients is like, if it's not a fuck yeah, it's a fuck no. Because
Yeah.
if this isn't perfect, another option's coming up next week or next month. So unless you need to make this one work or you need to make your move right now, which there are still those clients, there will always be those buyers, those sellers, and their investors that have that level of motivation for whatever reason. But like, then just wait for that. Like I'm doing this with my mom right now. She's selling a detached home she doesn't need anymore. We're looking at every single property that comes up in a specific price point in a specific neighborhood. And if it's not a fuck yeah, it's a fuck no. Well, I'll tell you right now, I've had about a dozen no's. So another one's coming up, guys. All right, no worries. See you on Tuesday. We're going to go view more properties. Actually, if mom's watching this, you got to email me back. I sent you a bunch of listings. I need you to get
Classic,
back to me
mom.
so I can book those. Come on, mom. I know you watch all the YouTube
Classic.
videos. Jesus, the worst client, man, I tell you.
Oh, I
So
know.
just like be really critical, guys. Things are still selling, but you like this isn't a stick a sign up. Any Joe Blow can get you 100 grand over asking. There's a lot of agents that are hurting right now. There's a lot of sellers that are hurting right now because they got dumb agents giving them advice that doesn't really make sense, and they're not actually understanding their goals and the market that's going on. Okay, so multi units. I'm more of a FIFO guy, fit in or F off, kind of person, right?
Yeah.
I looked up the with them. It's a what's in it for me.
What's in it for me? Yeah.
What is in it for me? Listen, you buyers out there that are buying investment properties, you're buying them to make money. I want to increase the cash flow. I want to appreciate and grow my equity, or I want to diversify, right? Sellers, give them something. You can't give an investor purchasing your property no opportunity and a really high price. If you're going to give them zero opportunity to immediately add value or to have very low risk or to not really appreciate and grow, well, you're not going to get the top end price. You're just not. So I'm not saying you have to devalue your property, but I'm saying you have to be very critical in understanding the value that you're selling. So if you have a property that is underperforming compared to other properties on the market, say most 10 unit properties are making 100 grand net a year, for example, and you're a 10 unit property and you're only netting 50 grand a year and you want a same price, it's not happening. They have better options on the table. So how can I draw a clear path for an investor to raise the income and benefit from the work that they're going to do after they acquire their property? Or can you do that before you sell it so you can raise your potential sale price? So I need a clear logical path, and I need to understand how you're going to present that and sell that. That's what we do. A lot of our clients that we sell the multis for, it's more of a conversation of how are we presenting your property to max the price, or what can we do before you sell it to max our price. Okay. And then for appreciation and equity growth, like fewer problems today for tomorrow's money. So if you're presenting a property that you're saying, hey, this is turnkey, this is nice. We got nice rents, nice tenants in there, nice condition, nice location. So we want a nice price. That's fine. But we need to present that to somebody who is willing to pay a little bit more now, Adam, in exchange for tomorrow's money. I want nice and slow, baby. I want no problems. They're going to pay you a premium because you set up the asset to give them fewer problems in exchange for still decent return, right? And then other people that are buying properties, and this is something that's actually kind of surprised me, was we've worked with a lot of clients the last 4 or 5 years that are diversifying into real estate, whether they already have a couple of properties or a little experience in investing in real estate or not. They're thinking about their kids. And I didn't
Yeah.
think that was going to be a market. I thought that would be such a small part of the market, but the reality is there's a lot of people that have done well for themselves and they see where real estate is going to be in 10 or 20 years. They see how difficult it's going to be for their kids, even if they end up getting good jobs and doing really well, to actually be able to afford to buy real estate. So a lot of
Yeah.
our clients are looking at ways to either, that's why the ADUs have really taken off too, is add units to existing properties that they own. And if they don't already own other properties that them or their kids could live in 10 or 20 years, then they're picking up a duplex or a triplex, or they're picking up a bungalow that they can convert into a duplex so that one kid lives upstairs, one kid lives downstairs, or they retire and they move into the duplex and the kids can live downstairs, or a triplex that a couple of the family members can live in, right? I put salaryman because a ramen spot we go to in town, they have a salaryman bowl, and I saw it the other day. So people that are making really good money, people that are business owners, people that are heavy in equities and want to diversify, we're seeing a lot of those people kind of start knocking on our door because they see the prices have depressed and inventory's up. And what's in it for them? They can scoop up a decent price point in a pretty good interest rate environment with little competition. So we
Yeah.
can get a slightly better price than we could yesterday, but we can have more protections and lower our risk because interest rate environment and the way we can negotiate the deal is going to be more favorable for the buyer now than it was, any time in the last 10 years. So that's kind of where we're seeing people take advantage. And I did not expect those types of people to start knocking on our door, but it makes a ton of sense. It makes a ton of sense.
Yeah, I mean, listen, it's really difficult to double your salary or have a
Yes.
year's worth of salary and savings, or if you're a business owner, all of the various challenges that come with not only your operations but your HR, your marketing, your sales, your accounting. There's so much that goes in to being a business owner that's honestly just difficult, and it requires wearing many hats. And then the heavy people that are heavily into equities, I mean, the lack of control is concerning, right? Because somebody can send a tweet that tanks half the market overnight. And so it's just difficult to, from any of those positions, see how you could easily double your money. And real estate's one of those things where it just kind of passively does it for you in the background. And of course, there's property management, and of course, there's improvements that need to be done, and of course, there's tenant turnover, and of course, there's vacancy, and everybody loves to talk about the leaky faucet. But for the most part, you can outsource a lot of those problems or challenges for like 8% of your revenue. And that's fantastic when you consider the idea that you could put in 50, 100, 200 grand that you've saved from working really hard on a salary or as a business owner, or maybe you've pulled some gains from the stock market, and you can put that into a market that just appreciates passively over time, and you can add value to it to force appreciation today by doing strategic renovations, by improving the capacity of the building. And so it's just so hard to make an argument against real estate. It just does itself. It grows on its own largely because it's tied to inflation, right? So the more money we print, the more liquidity there is, the more money there is in mortgages that chase these same amount of houses, because we all know Canada's not great at building houses. Ontario is like insanely behind on their building goals, and that's not going to change unless, like, honestly, there's some massive change in the industry, which is not
I hope
happening.
it changes for the sake of
Whatever.
homeowners
It's
and just
not.
Canadians being able to afford their own home. And I think just like having that control. But like, let's get real,
Yeah,
guys. It's
it's
been a
not.
problem for decades.
Yeah, it's
Decades.
not changing. And it's the regulatory market's so like the regulatory nature of Ontario and Canada of its in and of itself is just so
Suffocating.
regulated. That's
So
not going to
suffocating.
change. So, anyways, I think that's why those people are showing up, and I think that's fantastic, right?
Well, it's cool because you just like you see those people and they're thinking ahead for the kids and for themselves, and it's like, hey, if your family ends up moving away, okay, at least we got a decent little asset here. We're chipping away at the mortgage. You're making a little bit every month to cover your expenses, your maintenance, a little oopsie money, right? So there are scenarios that can make sense, and like I'm not here to convince anybody that real estate's perfect for them. Like I've found a niche here in Waterloo Region where we know the market as an investor really, really well. And if people are interested in that or want to take advantage of that, then they get in touch with us and maybe we can find them a really great scenario and a really great deal. Like we're here to make win-wins. And that's why it's just, we've been so lucky. A lot of the guys and girls coming from the real estate channel or from, networking events that we've ended up working with, it's just been really nice to have a lot of people in our world and our network that we're doing deals with that think the same way. So just been refreshing for sure. Makes it easy. Makes it easy to want to like, work, right? You like what you do and you're helping normal people, take care of themselves and their family. It's fun. But marketing is we talked about this a lot already, but I just like if you're selling an investment property, the two things here that are just like super, super, super important is strategically position the key data and make everything as simple as humanly possible. Like I need somebody to look at the listing and like, yeah, this is interesting in less than 5 to 10 seconds, right? And then the thing that you really hire an agent for to sell your properties, one, to do the whole thing, but primarily like anybody can be like, oh, what's your rent? What's your expenses? Okay, yeah, yeah, no problem. We'll get it up on the market on Tuesday after we're done media. Like direct marketing and communicating to agents and other investors is like so underrated. 99% of agents are just going to put a sign up and like wait for people to come. And that's fine in a good market. But we're heading into a market, we've been in a market where not every property sells. So, like, how are you going to get over to the edge? If you're not willing to put it at a price that is so low, everybody and their grandma wants to buy that, you actually want to get a good price for your property, gonna have to put in a little bit of work. So like we really focus heavily on direct marketing and direct communication to agents. Like I call a lot, right? It's lower volume, but it's higher intent. And I call a lot because I have short lists of agents and of investors that I think would be a good fit for it because I know kind of where they stand on the types of properties and the types of clients that they work with. So like I will email them and I will call them and then I'll email them again if they're not looking at my freaking listings, especially if I know they have clients and I know the listing's a good fit. That doesn't mean we're getting showings, we're getting offers, but just like get it in front of the people who are actually qualified and motivated to buy these types of properties and make it easy. Simple is key, right? Now, speaking of simple, 2 simple deals. We'll go high level. I already sent these out on the investor hot list. If you guys aren't on the investor hot list, there's a link in the description. It's a weekly email I put out every single week. Well, almost every week. If there's not good deals or if I'm traveling or sick, sorry, I need a little bit of grace, ladies and gentlemen. But this is a really good way to get a understanding of one, the types of deal flow that we got, two, specifically in Waterloo Region. Both of these aren't in Waterloo Region. So maybe important to highlight, like we're looking at deals all over Southern Ontario, specifically for purpose-built multis, close to that 15 to 20 unit and up. That's typically because those buildings offer a lot more value and are typically have a little bit more room. Sometimes they're trickier to negotiate because they're more complicated, but that's where we're starting to see the numbers, look really sexy for investors. So 15 unit in Port Dover, this is at price that they're asking. They're asking around two, high ones, low twos. You're a 6+ cap. You're 133 per door. Cheap. 133 per door. Attractive in almost any market in
That's great.
Ontario. You just can't build them even close to that price for crying
No.
out loud. So, right away, I want to take a peek at this one. We run the numbers on it. It's attractive. If anybody's looking for something like this, let us know. And then a 20 unit in Oshawa. This one's a little bit more turnkey, though. The current owner's done a lot of work kind of in the last 5 or 10 years. Close to transportation. I think this one's high five. You're still under 200K per door. And I think you can get close to 5% down financing on this. Obviously, we haven't gotten verification from lenders, but for the way we've structured some deals in the past with CMHC, there's definitely ways to get under 20% down on this building. We just kind of see some specifics before we can confirm that, but like this one could be attractive for somebody that's looking for something a little bit bigger, higher cost per door, but better condition, more rents, bigger market as well. If you guys are investors that are looking to stay in a little bit bigger markets, Port Dover is kind of small. So these are 2 deals we highlighted on the investor hot list this week. If you guys aren't already on it, there's the link right there. We're going to be hosting a couple more events or meetups here later on in the year. If we have finished other NADUs, we have a development project coming up that we're going to do a couple walkthrough tours of. If people are looking to do some infill projects for some 6, 8, or some 10 unit projects, those dates will be shared on the investor hot list and on the videos here, Adam. But I think the key takeaway for any of you guys that are really sticking around today for the end of the video is if you're looking for deals, start hunting. You guys should always be looking for deals if you're looking to add to your portfolio. If you're stuck, you don't really know what you want to do, whether you want to add, improve, sell, and get out before the market changes, like that's a case by case basis. Let's have an honest conversation about where you stand, what your long term and short term goals are, what risks we're taking in the current market. Let's be really critical about that. So at least you have some information to guide your decision making process. But ultimately, I think you guys that are on the videos here are doing a great job at just kind of educating yourself. It's a great first step. Me and Adam have a ton of fun making the videos. We're really into this stuff. So reach out to Adam or myself. We'd love to connect.
Awesome. Fantastic, Zach. Well, thanks again for another market update. You always bring the heat when it comes to unpacking the trends and the stats and what's actually happening in the market. And I absolutely love that about your content. And thanks again for setting up the real estate investor hot list. I think that's a great source of deals, information, news, updates. I know you guys are bringing a lot more than just the deals to that list as well. And I think that's a great resource for people looking to invest in the region. So we'll see you back here next month. And keep bringing these off-market deals. I'm into that.
Sexy deals.
Yes, I like those deals. All right, man. We'll catch you back here next month. Thank you so much for coming on.
Thanks, guys. See ya.